Alright, let's dive into something that's been bubbling under the surface of the markets lately, and trust me, it's more fascinating than it sounds. Imagine this, the world of grains and livestock futures, a place where numbers fluctuate like the weather, but today, there's a story here that's worth unpacking. So, here's the deal, December corn is down, soybeans are slipping, but wheat is having a moment. And if you're wondering why, well, it's all tied to something much bigger than just supply and demand. What makes this really interesting is the geopolitical angle. Wheat prices are rallying because of the ongoing tensions between Russia and Ukraine. Personally, I think this is a classic example of how global conflicts can ripple through markets in ways that aren't always obvious. The Black Sea region is a major player in wheat exports, and with reciprocal attacks disrupting trade, it's no surprise that prices are climbing. But here's the kicker, this isn't just about wheat. It's about how vulnerable our global food systems are to political instability. If you take a step back and think about it, this raises a deeper question: how much control do we really have over these markets when external factors can shake them so easily? Now, let's shift gears to livestock. Cattle contracts are rallying, but lean hogs? Not so much. What many people don't realize is that livestock markets are incredibly sensitive to consumer demand. With lean hogs struggling, it suggests that consumers might be pulling back, maybe due to economic pressures or shifting preferences. From my perspective, this is a subtle but important indicator of broader economic trends. If consumers are cutting back on pork, what does that say about spending habits overall? And how might this impact other sectors down the line? A detail I find fascinating is the USDA report on corn sales to Mexico. We're talking 120,000 metric tons, split between 2026 and 2027. On the surface, it's just another trade deal, but what this really suggests is the ongoing interdependence of global markets. Mexico is a key buyer of U.S. corn, and these sales highlight how tightly connected our economies are. But here's where it gets intriguing, corn and beans are under pressure due to a wet forecast. So, even as we're exporting, domestic production is facing challenges. It's a delicate balance, and one that's easy to overlook if you're not paying close attention. If you're following along, you might be thinking, okay, but what does this all mean for the average person? In my opinion, it's a reminder of how interconnected our world is. The price of your morning toast or your evening steak isn't just determined by local factors, it's influenced by everything from weather patterns to geopolitical conflicts. And that's what makes this so compelling. It's not just about numbers on a screen, it's about the real-world implications of these market movements. One thing that immediately stands out is the contrast between the Dow Jones rallying and the mixed performance of the livestock complex. The stock market is up, but livestock is sending mixed signals. What this really suggests is that investors are optimistic about the broader economy, but specific sectors are still facing headwinds. It's a nuanced picture, and it's a reminder that not all markets move in lockstep. Personally, I think this is a great example of why diversification matters, because even when one area is struggling, another might be thriving. So, as we wrap this up, here's my closing thought: these markets are more than just numbers, they are a reflection of the world we live in. From geopolitical tensions to consumer behavior, every fluctuation tells a story. And if there's one thing I've learned from analyzing these trends, it's that nothing happens in a vacuum. Everything is connected, and understanding those connections is key. So, the next time you hear about corn prices or cattle contracts, remember, it's not just about the commodities. It's about the bigger picture. What do you think? Let me know in the comments below.